everyone's done such a great job of tuning in so quickly and doing the right thing. Look, for those that don't know me personally, my name's Chris Slack. Today is the second day of Broker Illuminati, which was set up really a little bit tongue-in-cheek. It really shouldn't be, you really shouldn't have to be part of a secret society to receive the sort of professional development and answers we need as brokers in commercial, but it does seem to be a lot harder to get some of the more obscure areas outside a straight property loan and get the sort of information we need. And today I'll admit to being a little bit excited in that we're covering today an area that I think a lot of people need help with, brokers and accountants and small business alike. And there really isn't a lot of people covering that space for other brokers and accountants. There are some exceptions to the rule. So I wanted to share with you my contacts that look after structuring and businesses that have some difficulties, that being Peter from BRI Ferrier, as well as Frank from Jones Partners. And we also have with us today Nick Samios from Hermes Capital. Nick, for those people that want more specific content around turnaround insolvency and I suppose special situations, I'd certainly encourage you to tune into his Lunch Money series. It's certainly been a hit for many. So welcome everyone, and thank you very much for joining me. And I suppose what I'd like to do, Pete, given you're on my screen, I'll kick off with yourself. Mate, why has there been so many companies struggling with COVID, yet insolvency seem to be an all-time low? How does that work?
It's quite extraordinary, Chris, and it's a really good question. And just so you know, the statistic, we're actually 46%. There are 46% less insolvencies over the period. I think it's March to July 2020, compared to the same time last year, which is remarkable. Purely for the reason that we're supposed to be in the midst of a pretty significant recession. So the answer to that is, of course, is the government measures that they introduced, and they've been extraordinary. And what they've done is basically shielded corporate Australia. There's no two ways about that. And particularly when a lot of these businesses, their sales fell off a cliff, right? I mean, as soon as that lockdown happened, people stopped spending, and as you know, the Australian economy is something like 70% based on consumer spending, and that just came to an end. So it's a credit to the government to having introduced those measures, but at the same time, this fiscal stimulus, I think that's what you call it, must come to an end. And so they've already announced that will come to an end at the end of December. And what they see coming is pretty much, I think, a deluge of businesses that will need to be restructured, because they are purely surviving. I think a significant number, not all of them, right? Not all of them, but a significant number are purely surviving on the largesse of the government. And it's a credit to the government, as I said earlier, having introduced those measures, because look, there'd be, I think, you know, had they not done that, there'd be massive corporate failure. There'd be civil unrest and all those things. So they used the levers available to them, both monetary and fiscal. And you know, Nick mentioned Martin North. He talks about all these things, and I listen to Martin North. And but it has been a terrific intervention into the market and has worked well, but it will come to an end. And what that means is there'll be significant restructuring, because we've all heard the cliche, the new normal. There will be a new normal. It won't be this violent V-shaped recovery. It'll be somewhere significantly less in terms of business activity, and businesses will need to be restructured. And so, you know, a lot of insolvency practitioners are pretty much getting ready for when that occurs, and it's probably around the first quarter of next year is what certainly the government is indicating and what the profession is expecting.
It's funny, Peter, I've got to tell you, me personally, one of my least favourite expressions of all time is new normal, because new normal seems to be an expression that is always used to make someone's stomach a less palatable situation. It doesn't matter what the conversation is. When someone talks about new normal, it's there really to help us stomach a less palatable situation. So, Frank, I'll be interested in your thoughts. Mate, do you agree with Peter's comments there? And if so, when do you see that situation changing? And I suppose the question, which I'll throw back to you eventually, Peter, is, I suppose, from your perspective, Frank, how do you see the surge of demand from little violins playing for insolvency practitioners around Australia for the last 6 months to an inundation of work? How do you plan on, if you agree with Peter, how do you see yourself coping with the demand, man?
Yeah, no, I agree with Peter. I mean, the government stimuluses have played a big role in delaying basically the inevitable for a lot of businesses. So what's the concern is going to be, and I'm sure, Peter, you feel this as well, is that there's been a lot of businesses that have been using, some may have kept some cash flow from this stimulus, but a lot of them have just used up all their cash. So they're going to come to the end of this 31st December where the government, most of the government stimulus has stopped. There's going to be no cash. There's going to be no assets because they've used up all their liquid assets there. So the issue is going to be, well, if they need the service of the insolvency practitioner, then they're also going to have to not only fund for the cost of that, but also fund the actual plan to put forward to the creditors. So what I'm hoping that businesses are going to start doing in conjunction with their advisors is start planning for this 1st of January to see what they can do, which is why the government may have put it, has now legislated new insolvency and restructuring regimes to help with this costing in the new year.
So I suppose to that point, what are the different options that are available for a business that's affected? Frank, what are the options? Someone's in trouble. What are the options that are available to them?
Yeah, so there's, in respect to formal restructure, so you have the voluntary administration to go into a deed of company arrangement, which is a procedure that's more aimed at even SMEs, but the larger SMEs who have funds there to put forward a proposal to creditors to get a certain amount of cents in the dollar. There's winding down, which is the liquidation, which will mean that there is really no business there left that you want to restructure or continue. So basically you're winding up the business. And from the 1st of January, there's the new restructuring that's going to be put in place, where it's still a formal arrangement that binds all creditors as long as companies meet a certain criteria. And it won't be a liquidation or a voluntary administration. It's called a restructure, and it's a proposal that you put to creditors where they receive a certain amount of cents in the dollar, either upfront or it'll be over time, maybe 1 or 2 years. And this proposal binds all the creditors, all the unsecured creditors to the proposal. So it's a good option there for these small businesses, which in the past couldn't afford to do a voluntary administration deed of company arrangement because they are quite costly because of all the onerous obligations on the practitioner in performing their duties. So this is more of a way to do a restructure. The directors still get to keep in control of their business, but they don't have that liquidation basically or external administration deed of company arrangement tied to that business, which they would have at the moment if they do it.
Okay, and in terms of from your perspective, Peter, how do you see this? Do you see things the same way as Frank there in terms of the timings, in terms of the coping of demand?
Yeah, look, absolutely, and look, and I give credit to the government for introducing these reforms, and to Frank's point there around this new process that's aimed at that small business, small SME market, where it's only for companies with claims up to $1 million, and that represents something like 76% of the market. And so it is a good reform, I think. And again, to Frank's point, it is generally expensive to go through voluntary administration. So what makes this less expensive is that it's actually the directors of the company remain in control and the ongoing trading of the business while that restructure proposal is formulated. But can I just make the point? I mean, this is a black swan event, right? No one really could have planned for what's occurred with COVID-19. This whole process, whether it's voluntary administration or the new process for SMEs, is pretty much like a political campaign, right? What you need is 51% of your creditors supporting your restructuring proposal. My view is you're going to get that, provided you're going to get creditors rallying to support you. If you've been a customer of theirs over many years, they've made profits from you over that time, and this black swan event has impacted your business, they're going to feel empathy for you, and they're going to be supportive of you if you present to them a restructuring proposal that gives them a better return than what they would likely get in a liquidation, and enables that business to continue going forward. You're going to find that creditors will rally in support, which is what the government's objective is, right? I mean, what they want is economic growth. They want businesses to continue. They don't want to see destruction of value of really good businesses that should be allowed to restructure and continue trading. So for my part, I think it's a terrific initiative. It should be embraced by businesses. It should be, it'll be a mechanism to allow good businesses to survive. And there are a number of elements to that, which including finance, and that may be a good segue into Nick, because you'll need finance.
A demarcation dispute here, right? You're trying to do my job.
You'll need finance. You'll need access to capital to achieve that. So,
it's interesting you say that from yours and Frank's perspective. I do want to move on to Nick, but before I do, I want to ask just one part of this. Do you expect, obviously yourself and Frank, you see X amount of businesses at different levels during the year. The sheer number of businesses that will be affected that most people are expecting here, are we going to see an H&R Block, cut price deli version of insolvency? How is this literally going to be delivered, in your opinion?
So, as part of the reforms with the small businesses that meet that criteria that Peter mentioned earlier, there is a more streamlined liquidation process. If the company meets that criteria, which would mean that the cost of the actual external administration itself will be a lot lower for the practitioner. Look, to be honest, there is already a bit of a price war out there, but I think what the directors really need to understand is it's all about quality of work and the service that the practitioner provides them. So, albeit there might be a bit of a price war and a bit of a low cost and go for the cheapest possible, but it's all about the service that the practitioner can provide and providing the right company with the right service. So doing the simplified process will be a lot cheaper than the traditional liquidation with the amount of investigations and other obligations on the practitioner. So that will help with the processes and basically the prices out there. But I don't see how it's going to be a total price war where it will be this low cut, almost consumer level prices, I think they'll still be a little bit difficult for the standard practitioner. I'm not sure what Peter may have a different view, but
yeah, no, I tend to agree with you there, Frank. I think just sort of reading between the lines, I think what the government is envisaging is a sort of cost of that SME restructure of about 50K. I think that's sort of where they're aiming, which they believe most SMEs will be able to sustain in terms of a cost of a restructure. And so and the way that's achieved, of course, is the fact that the restructuring person appointed by the company isn't actually trading that business. It's still in the hands of the director. So the risk factor of trading a business and the costs that are associated with that pretty much go out the window, which then enables that restructuring person appointed by the board to focus on that restructuring plan. And the language, if you read the legislation, it's fixed fee and it's low cost, and and trying to keep it outside that sort of environment of voluntary administration, which doesn't suit all businesses, and that's the reason why this legislation has been enacted. And again, it's due to the fact that they see a whole lot of these businesses that will need to be restructured once those government measures come to an end at the end of December.
Nick, very keen to hear your point of view at this stage. We've been talking about the experts that are involved in restructuring businesses in distress. Now I'd like to hear from the funder that's very well known for taking a view on clients in distress and looking at the underlying security. What's your take on it all, Nick, in terms of how you see the influx of businesses post the government stimulus, and how do you see personally, from a lender's perspective, some of these aspects being considered?
Well, I think firstly, just a quick comment on the on this new insolvency regime. It does apply to businesses under $1 million. I call it the hair salons and tuck shop insolvency. I don't think it's going to really, if you're talking about transport companies, any sort of a larger business, they're going to easily have more than $1 million worth of debts once you add in the employee entitlements. So I think it's a nice political gesture, but where the rubber hits the road, I don't know. Moving on to your question, my concern firstly, there's a concern that when the economy sort of starts to emerge come the other side of the new year, once the insolvency moratoriums come off and and JobKeeper starts to roll back and all the rest of it, my biggest concern is that not companies entering into administration, which would be restructuring opportunities. And when there's a restructuring opportunity, there's obviously a financing opportunity as well. My concern is that too many of them might end up in liquidation, and that's good for the other boys, but not real good for you and me, Chris. But so then it comes down to what are the opportunities that are going to be salvageable, and by salvageable, I also mean financeable. It's going to be what people, businesses that have a business model moving forward. So it's going to be a matter of looking for. There's a couple of things. Firstly, some businesses are going to be fundamentally changed in the way they do business. There's some of them have made shifts to digital. The marketplace has changed. To what extent the new world looks like the old world, I don't know. I suspect the new world will look a lot like the old world. I mean, it was announced today miraculously. I mean, who would have thought just after the US election, they would have found a cure for COVID? But they're now talking about Pfizer have announced this what do you call it?
Vaccine,
yeah, with a 90% efficacy apparently. They only found that out now, which is interesting. But things could look a lot more normal. But it's going to be about to finance a business. It has to have sales. It has to have revenues. It has to be profitable. And, you know, and then if you're talking about, you know, distressed turnaround type scenarios, you're typically talking about scenarios where you're going to be relying on some assets, whether or not they're plant and equipment assets, you know, property assets or accounts receivable. And then it's a question of what those assets are worth. You know, now the stock market's come roaring back today, and, you know, if that gets reflected in plant and equipment assets and all the rest of it, then happy days. But it just depends on how those sorts of values hold up, as well as to what sort of headroom there's going to be for funding to come in to fund restructuring. And just one final point is, it was interesting when this COVID first hit, you know, certainly here at Hermes, you know, we were concerned that all of a sudden the debtors would stop paying. Actually, the opposite's happened, and we've had very low chargebacks or you know, accounts entering into 90 days. And I think that's directly a function, obviously, of JobKeeper and all the other support. The question is, what happens when those support come off? You know, are the debtor payments all of a sudden going to stop? If that happens, well, then that's obviously makes restructuring difficult.
It's funny you say that, Nick. The feedback I've got from some of the other debtor lenders I work with as well is that the issue's really been that you're right, people that already have those facilities haven't needed to draw so heavily. So that's the other side to it. I suppose the question that I've got for yourself and the whole panel, Nick, you yourself personally, you're very well known in the finance industry for being that person that takes an objective view to where a business is, regardless of stage. You look beyond the numbers and you take a fairly pragmatic approach. When, given the changes and to steal Peter's new normal, when would a broker, in your opinion, get involved, and when would an accountant get involved with a business that is in trouble? Where do you think that point is, and how do you see the role of a broker?
That's a good question. I mean, I think, what the first thing is that, you know, when I started out in finance, you know, people had bank managers, and, you know, your bank manager would be with the business for many years. These days, I do believe, you know, a good broker has replaced the bank manager, because, you know, I challenge your brokers to say to one of their clients, how many bank managers have you had in the past 10 years? And most of those clients probably couldn't even count the number of bank managers they've had, even if they're big enough to have actually had bank managers. Whereas hopefully, if the client's been, you know, doing a good job, that they may well have had that one broker for that whole period, right? And so very often the broker is the receptacle of corporate knowledge for that business. It's the broker that was with the client 5 years ago when they had that thing that did the other thing, or 6 years ago when, you know, they introduced this new product line and it went gangbusters, and, you know, last year when they lost the general manager, and that, you know, all of that corporate history, you know, because the brokers had to sell finance, you know, sell that client, you know, every year after year, you know, if they're selling equipment or whatever it might be. And so they've got that corporate history, and they should certainly be retaining that. I mean, the other thing is that the good broker can also just have the confidence. And this is one of the issues for any kind of advisor, of course. You know, if you tell the client the truth, the big risk is they don't want to hear the truth, and so they go and talk to another broker. I mean, we've all been in that situation where, you know, I'm sure that you know, I'm sure that Peter and Frank as well know exactly what I'm talking about. You know, sometimes the only news is bad news, you know, in terms of, you know, you're going to have to eat a manure sandwich, and there's no getting around that. You know, I can put a bit of sauce on it for you, but the client doesn't necessarily want to hear that. And the big risk is, of course, they just go to another broker that's not going to tell them the right story. And as I say, I'm sure that the other boys have, you know, you tell a client the truth and it's not what they want to hear, so they go to a different liquidator that's going to tell them what they want to hear, and the eventuality is what you told them in the first place. So look, I think that I think that brokers need to keep their files topped up, keep in front of the client, make sure that they're you know, a reliable source of facts for the client, and tell the client the way things are. But you know, stay tuned and obviously be across the market to make sure they know, you know, they know how to accommodate the client when the time comes.
And for accountants, Nick, at what stage does an accountant put the hand up and say, you know what? And I don't mean to be dictating here, but from your personal opinion, at what stage do you think an accountant should be putting their hand up and saying, hey, that business is in some trouble, I need to refer them? Where does that line sit, just in your opinion?
Look, I think it's always earlier than what the client would think, because the trouble is the client will always look for an interpretation of the facts that means they can keep their head buried in the sand. And you talk to any restructuring or turnaround professional, the biggest problem is people not seeking early help. And so I think that the accountant, should intervene as early as possible, and to make sure that the client is across their actual situation. So make sure they've got the data. The thing is, I've always said that there's two kinds of accountants. There's the entrepreneurial accountant that gets involved with the client, and then there's the what do I call it? The compliance accountant. The accountants, they're doing the tax returns, making sure the taxes is low and all that sort of stuff. The trouble is that the entrepreneur, and you can tell the difference, because the entrepreneurial accountant, when they talk about their client, they say we. It's almost like that. And sometimes you're going to think, well, do you own shares in the business? No, it's not they own shares in the business. It's just they see themselves as being part of the client. And I think what these times really call on some of those compliance accountants really to sort of start behaving a little bit more like the entrepreneurial accountant and get involved in their clients, more as part of the business, sooner rather than later, before it's too late. Otherwise, it'll be okay for the boys, for Peter and Frank, they'll still get a job, but unfortunately it'll be a liquidation rather than a restructure.
Love your points there, Nick. And in particular, there's one entrepreneurial accountant I know that's on this call who I think will get a lot out of that. I think it's a great point you make. Just before I continue down the path, I just want to remind everyone, hey, these sessions are completely interactive. Get on the chat. If there's something you want to pick up out of today's session, it's really, we're taking time out of our own businesses, and you are as well. Make sure you get something out of today's session. Use the chat feature. If you're not comfortable sharing it with the group, that's fine. You can also message me privately. I'm happy to bring it up in a different way if that's what you need. But I want to throw back to Frank and Peter, because there's a point they sort of mentioned there in terms of, okay, Nick mentioned that, okay, there's different stages in terms of whether it's the right thing for a business versus whether it's too late. We talked about the threshold in terms of where those different businesses would get involved. I'm interested, Peter and Frank, your job is obviously to get some new work, and we're coming into a period of time where work hasn't been as abundant as it's about to be. There's a lot of brokers and accountants on this call. They want to know, actually, how would you have that conversation with your client? So I'm introducing yourself, Frank, or yourself, Peter. I'm a broker, and or an accountant, I've identified it. Tell me how you'd have the conversation. Don't all jump in at once.
Well, look, I think the most important thing is to get in early. But the first question I always ask is, well, what does the client want? What do they want to achieve from their business? And then basically the advice that I can give at the time is all tailored around what they want. And if they are, and trying to politely put this dreaming a little bit, then politely tell them, well, this is what can happen. This is different scenarios, because I think it's all about, well, what are the consequences of each decision? I think it's very important to take all the different scenarios in place. And look, if they do want a second opinion, I mean, you get a second opinion if you get a bad diagnosis from a doctor. There's no reason why you can't get a second opinion if you get a diagnosis from an insolvency practitioner. You want someone else's opinion. So I don't see any problem with seeing different types of view, but it's all about the options that are available. And I think this new option that's there now, where it's not a liquidation, it's not a VA which will go into a liquidation if creditors don't approve it. I think it's a great time to start getting in front of the accountant and in line with a qualified practitioner who has experience to have a look at, well, what are the consequences of the different decisions I'm going to make.
So specifically, to sort of run with the ball a little bit here, I'm talking about that GP analogy, like yourself and Peter as specialists, and myself as a broker or an accountant, as the GP, having to deliver. There's going to be people on this call that have never had to have these conversations with clients. And there's a lot of people that aren't going to be used to having this conversation with the client. So it's not like the GP that's been told by the specialist, to tell their client that they've got cancer here. We're talking about actually what does that conversation look like? Do I turn around and I say this because I know I want to be more equipped for the conversation. I think a lot more people do too, because we expect that that's going to occur. So are we saying, Frank, to run with the ball a little here, that the way I should be having that conversation would go a little bit like, we've looked at where things are at for your business currently, not sure whether you're achieving what you'd like to since COVID. I think we should have a chat with someone else who's a specialist in this area. The actual soft skills, is that how would you see that conversation?
Well, that's right, and I think you need to really focus on the positives of a restructure, or if it is going to be a liquidation, there's still some positives that come out to it, because it brings a finality to basically what has been happening, gives someone a chance for a fresh start, and you're doing everything by the book and by the law to basically, revive your business and continue on trading. And if you keep going the way you're going, you might end up in a worse position, because the longer you leave it, the harder it is to get back out of trouble. So it's all about early intervention, and there's no, it's basically a conversation with an insolvency practitioner who has that experience and knowledge of, well, is a restructure or is an appointment going to be needed? Or we might even look at ways, well, how can you avoid needing an appointment? What are there still a way out? Are there still a way to turn around your business without actually needing a formal appointment? But that can only be done by having that actual getting in front of the practitioner and having that conversation.
Peter, your thoughts?
Yeah, look, I agree with a lot of what Frank has said there. The fact of the matter is, a lot of owners of businesses are eternally optimistic, and I get that, right? I mean, everything, they've invested a lot in that business, and they see the upside, and they want to delay in terms of talking to, being realistic about the situation. And I think what accountants should bring is a dose of sort of commercial reality. They kind of go in there and say, listen, like I think, despite your eternal optimism, I think there's a serious issue here in terms of, sales have fallen off a cliff, and we haven't gone back to where we were. We haven't been able to reduce our overheads to a level that you need to make this business viable. So, a restructure is really something that you need to entertain and consider around, how you're going to make this business viable. So, that's pretty much, the case in terms of, dealing with a lot of, internally optimistic directors. And frankly, a lot of directors want to pay 100 cents in the dollar, right? And do all those things. But my view is, you don't need to do that. If you're be commercial about it. The government's put out this new regime to pretty much compromise debts. I mean, really, at the end of the day, it's around, how do you allow this business to survive? So forget about this notion of trying to pay 100 cents in the dollar. This is a black swan event. It's impacted you in such a significant way. Let's give creditors a better return than liquidation. provided you've got a viable business at the end of the day. I mean, that's the caveat over all this. There's got to be a viable business. I mean, if your business relies on international travelers, and whatnot, well, that's not going to happen for 2 years. So big question mark whether you've got a viable business. But provided you meet that viable business and you're open to change and all those sort of things, then you're going to get creditors who support a restructure at some level to allow that business to continue. So the accountant, I think, plays an important part in terms of bringing a dose of commercial reality to it, making that hard decision that this needs to be restructured. Let's preserve your capital. Let's use that capital in an effective way. We can compromise debts and allow you to give you that business the platform to trade and be profitable going forward.
Thanks everyone for covering off there. I still want to make sure that I cover off on one really important point, because I want to make sure that everyone attending this session gets a few key takeouts about the what next. For mine, I still think there's going to be people that are listening or attending that are going to want a little bit of clarity. They haven't dealt with clients that have fallen over. They haven't seen that. There's a lot of brokers and even the odd accountant that hasn't seen a client going the other way. So from my point of view, just to cover off on some of the points that were made earlier today, there was a comment by Nick earlier about whether asset valuations will hold. It's a very good question. If you'd like some more answers on that, our session at 11:30 today covers off on asset valuations, and we've got Craig from Slater who's joining us there. Peter talked before about the whether we're paying 100 cents in the dollar or not, and one of the creditors that a few of those businesses may well have is the ATO, and we are talking directly after this session. The next session is specifically around the treatment of tax debt and negotiation of tax debt post-COVID. So I welcome anyone to join us for the next session as well. Before I let everyone leave, I think this has been an excellent discussion. What I'm after, let's say I'm a newer to industry broker. I haven't had a client fall over. What's my key takeout now? We've talked about the fact that there's going to be tons of clients who are going to be in a position that they have to evaluate, reassess where they're at. Many of those might have been bank clients that may not be bank clients anymore. And whilst Frank, yourself, and Peter are expecting an influx of new clients come January, really there should be a glut of additional commercial clients for us as brokers, simply because, as Nick sort of alluded to, there's that demand there. So what I'd like from everyone on the panel is, okay, you're a broker, you've heard this. How do you, if you were us, you were a broker or an accountant, how would you take advantage? What would your next steps be? Who would we be communicating with? What's our next move strategically for 2021? And I'll start with you, Frank, because you're right in front of me on the screen here.
Look, I think the first thing would be making sure, which as brokers you usually would ensuring all the accounts are all up to date. So accountants have brought all the books and brought the financials up to date, tax returns up to date, and everything, get an overall position. So I think that's important to know. But if you're seeing a client and you think that, well, you can't help them now, but there is potential to help them in the future if they just need to just get their act together and come back good, then that's the time they need to see the professionals to basically turn the business around. And then perhaps after that, they may be able to achieve financing because they'll have real assets there that can help fund the business. And early intervention is key.
Pete?
Yeah, look, I agree with that. Early intervention is key, and I think for that finance broker, it's fundamental, I think, to have financiers that kind of get it. They get that this restructuring needs to happen. There's a lot of banks out there. Well, sorry, I can say quite confidently, all the banks, second tier finances, they just don't get it. It's not something that they want to get involved in. And I've got one at the moment where it's I'm agent for mortgagee possession, you know, significant commercial property and so forth. And the sponsor, the debtor wants to refinance. He wants to go to CBA. It's not going to happen. It's in receivership. It's in mortgagee in possession. Even though he's adding further security to that loan for the CBA, the fact of the matter is he's in mortgagee in possession. CBA will not want a problematic client from day one, and so it needs second tier finance. You know, financiers, non-bank lenders such as Nick and others that get it, that understand the restructuring process, and there'll be a time in purgatory, at some level with Nick and others, and then they can go back to the normal bank. So that is the reality of the situation, notwithstanding what you might hear about banks wanting to, finance these sort of matters. They don't. It's a simple fact.
And Nick, the last word to you, mate. And if you could potentially add some of the industry segments, because we did talk about I loved your phrase regarding the hair salon insolvencies. But if you could, please, I suppose a next step for brokers after this session, but also maybe some of the industry groups you see as being key opportunities for brokers to sort of step in and have a more in-depth relationship, given the climate at the moment.
Yeah, I mean, look, trying to pick industries is a little bit hard. I mean, I'd be guided by the government issued a plan for manufacturing where they're going to look for 6 different segments to target. But I'm going to assume, I guess there's looking for industry segments that'll be opportunistic is one thing. The other thing is to look into your own client base. Obviously, the retailers and anything travel related is going to be problematic. I mean, what I would like to say is that, I think brokers and accountants need to understand there's one thing that everybody in the world wants. Everybody in the world wants certainty, and we are in very uncertain times, and we're about to go into even bigger uncertainty. And I liken it, it's like the fog of war. It's a battle, right? You're going to be, and the accountants and the brokers have opportunities here to lead. What do you need to do to win a battle? You need to do your reconnaissance. So make sure you understand the client, understand the client's market, understand what's realistically possible. You need to make a plan, help your client make a plan. You need to make sure you've got the right team. So, if you've got some lawyers that you trust, if you've got someone like Peter or Frank that you trust that you can call on. Reconnaissance, have a plan, make sure you got the right team, and then you need to lead. The client is uncertain. They're not sure which way to turn. If everybody agrees on the objective and agrees on the plan, the client needs someone who is going to step out of the trench with them and walk towards the machine gun nest with every confidence that the plan's right, the team's right, we know what we're doing here, and let's just face it, and we'll get there, and we're going to win. And that's what I think this is about. It's tough times. There's a lot of uncertainty. This is a great opportunity for accountants and brokers to really build relationships with their clients that will last forever if they can lead them through this next little battlefield, because beyond that, they'll be clients for life.
That's a fantastic way to finish. Thank you very much, Nick. And this session delivered every little bit of what I expected it to for a lot of people. I'm going to leave with a quick remark of my own. One of the sessions yesterday referred to invoice finance, receivables finance, and referred to looking at working capital as being more than a sugar fix. And us as brokers, and certainly to some extent accountants, we need to be moving away from the sugar fix and working as a team, as you quite rightfully say there, Nick, to be going into battle for clients at this time. So an amazing session. Thank you very much to all our panel. Thank you very much for those that joined us. If you'd like this session, please make sure you post, tell people about this on LinkedIn, use the hashtag BrokerIlluminati, We want more people to realise that you shouldn't be part of a secret society to get quality professional development in this area, which I think, for those that certainly attended, you would have to agree has been sorely lacking. This is not the sort of conversation you hear more of. If you want some more specifics on turnaround and special situations, can't really recommend Lunch Money enough, which is Nick's regular sessions on LinkedIn. I believe it's on Friday midday, Nick.
Yep.
Yep. So thanks, everyone.